Right and wrong investment methods, the secrets to property success. See, sorry for that big title, but at the same time, that is totally true about this video. I want to share with you some very important lessons and a story from one of my friends who actually started out in property investing right around the same time as I did. It was him and a business partner. They really wanted to start. They'd done lots of education. They'd learned about property, and they had money. So for them, the only question was, how can we put that money into properties as soon as possible, get the passive income, and quit our job? So it was a very easy kind of mindset. And so they'd been properly educated to buy distressed property. So were talking to sourcing agents all over the UK. They were scrambling to find a deal, scrambling to find a deal, scrambling to find a deal, and they got a deal, and no, it wasn't good enough. Got a deal, and they did their due diligence, and it just wasn't what it was said it was. Got a deal, and nothing actually lived up to the hype of what they had learned and what they had been pitched, and they couldn't find a deal. Finally, they were starting to get desperate. Hey, good morning, Laura. Thank you for that heart. Thank you. But they were getting desperate and they were getting stressed, and they had the money. They just wanted to put it into action. They just wanted a deal, but they didn't know how. They didn't know what to do because they weren't getting good enough deals. So they went back to their mentor and they said, "Look, what can we do?" And he said, "Well, I'll just keep talking to sourcing agents. Keep talking to sourcing agents. But one thing you could do is buy a high yield property that doesn't cost a lot." What do you mean? Well, go talk to the sourcing agents up in Scotland. And so they went and talked to these sourcing agents up in Scotland. And they found 3 small buy-to-lets. They all cost around £40,000 and had a very high yield, meaning a very high rent. And they ran their numbers and they saw if they get a mortgage on these, if they could get a 70%, hey, good morning, Helena. Thank you so much for being here with me live. I always appreciate that. And then thanks for the comment. Thanks for saying hi. But they say, if they bought these 3 and they got a mortgage, regular 70% mortgage at around 4% interest, they would have a return of over 30% would be their ROI, which is incredibly high. That's an incredibly high return. And so they got really, really excited. So they bought all 3. And they refurbed them. They did them up. They went very, very well. And they started renting them out. All that went well until they went back to the banks. And now this is one of the biggest mistakes new investors make, is when you're going to start your strategy, when you're going to invest, it's important to understand all the implications of that strategy. So, what are the financing options for a deal like this? What are the availability of deals in the country you're going to, and all these things. And they hadn't done this due diligence, okay? And so when they went and they talked to the mortgage brokers, it turned out that very few lenders want to lend up in Scotland. And they said, okay, but you just say very few, that means still some. They say, yeah, that's true, but lenders generally want your deals to be worth over £100,000. They said, yeah, but we got 3. Yeah, but you don't have one that's worth anything. 3 times crap is still crap. There are words here, okay? 3 times crap is still crap. And so they weren't able to get a mortgage. And they, this meant that they were getting a much lower return. Their return wasn't over 30%, it was about 10%. And what happened was time went by, and finally they got offered a mortgage, but it wasn't 70% at 4%, it was actually 65% at 8%. They did it because they still had to pull money out because they were now stuck. They put in $150K into these 3 deals. That was their money. That was what was going to seed them to become free. But instead, all that money was stuck in this deal. So they realized, okay, we got to pull it out what we can. It pulls our return down, so we only got a 15% return, but we get some money back and we can keep going. But the lesson from this, what I want you to take with you, is that, look, just because you're stressed, don't go in and do a bad deal. Keep your level high. Yes, you might have to refigure what are your requirements. go back and talk to your mentor and discuss, are my requirements just too high? Isn't this available in the market? I know a lot of education companies hype up the quality of deals to like unreasonable levels. We try to teach you what is actually out there in the market, what works, what is there. So you go in with right expectations. And when a good deal is there, it's good. You don't just think, oh no, this isn't as good as I learned in my education, which a lot of people do. But we're going to make sure you do the right deals for the right reasons. But don't jump into a deal that just isn't up to par, that isn't up to standard. Do good deals for the right reasons, and you'll have great returns. So I want you to take that lesson, and before you jump into a deal, do your due diligence, okay? Make sure you're doing your due diligence. You're seeing, and not just about the deal, but about the mortgages, about the, the systems, about the availability of lending and everything else, so you're doing the right deals. So I just want you to take this with you. You have the ability to make amazing deals, and you'll be able to change your life. The best thing to do is buy in England or Wales deals over £100,000. And my preference is to buy things that are already tenanted, already rented out, because you're getting cash flow from day one. But you can absolutely buy distressed property. If they have a really good return, buy them. Just make sure you do your due diligence first, all right? If you do your due diligence, if you make sure that you're buying the right deals for the right reasons with the right information, you're going to be doing well. Obviously, the last point there, with the right team. So if you got all those points in line, you will be fine. Your deals will go well, and you'll be on your way on your way to build your financial freedom. So thank you so much for today. I hope you get some valuable lessons out of this, and I hope to see you again soon.